Hello and welcome to this first lecture of this new section on basic accounting concepts in this course, Finance and Accounting Fundamentals. So the purpose of this section is to provide you an in-depth view of the basic accounting concepts. And we will begin by talking the accounting principles, and in this lecture we will cover GAAP, Generally Accepted Accounting Principles, right? So what are these generally accepted accounting principles, GAAP? So GAAP are a set of rules and standards used for financial reporting in the United States. Now, these principles are established to ensure consistency, reliability, transparency, and comparability of the financial statements across the different organizations. GAAP is developed by the Financial Accounting Standards Board (FASB) and is recognized as a authoritative guide for accounting practices. So that is what a quick overview of GAAP. Now, what are the key principles of GAAP? GAAP. So principles of the first principle is the principle of regularity, where you need to adhere to the GAAP rules and regulations, GAAP rules and regulations. Second is about consistency, where you apply consistently the accounting methods over time to allow for comparability with your previous documents over different periods of time. The third principle is the principle of sincerity, where you need to which ensures that you have an accurate and honest representation of the financial position of any organization for which you are preparing this financial statement. The fourth one is the permanence of methods. So there, which basically states that consistent use of accounting methods and procedures needs to be done, which enable the comparability over a period of time, right? Then the last principle for GAAP is the principle of non-compensation, which basically says full disclosure of both positive and negative financial information without compensating debts with assets or revenue with expenses. So it needs a full disclosure, right? So these are the principles of GAAP, key principles of GAAP. More of them as we go about. There are totally 10 principles. So five we have talked, five more we will cover now. Then there is this principle of prudence, in which you need to report an expenses and liability, as per which you need to report expenses and liability as soon as possible, but only recognizing revenue when they are assured. So revenue must be assured. It should not be a maybe revenue kind of a reporting. Then there is a principle of continuity, where the assumption needs to be made that the business will continue to operate in a foreseeable future. So we need to assume that business will continue. You can't say the business will not continue and hence I am going to provide these expenses without any clear plans. Then there is a principle of periodicity, where financial reporting is divided into specific time periods such as quarters or fiscal years. Principle of full disclosure, all financial information and relevant facts must be disclosed in the financial report. And that ties up with another principle that we talked about, trust. Then there is a principle of materiality. All significant information must be disclosed and insignificant information can be omitted. And that's where a lot of judgment comes in. But basically, it says that if you think something is going to make a material difference to your business, you must disclose it. What are the major GAAP concepts? So, first is the concept of accrual accounting. Revenues and expenses are recorded to be recorded when they are earned or incurred, not necessarily when the cash is received or paid. As soon as your revenues confirm that this revenue will come and the bill has been raised and there is a good chance a customer will pay, then that is the time to recognize revenue rather than waiting for cash to receive. And likewise for the expenses. Now, second is the revenue recognition principle, in which revenue is recognized when it is earned and realizable. You have delivered the services or you are delivering services and you have a good chance of realizing the revenue, regardless of when the cash is received. So it ties up with accrual accounting. Third is the matching principle, where expenses are matched with revenue. They help to generate in the same accounting period. If an expense is incurred to generate a revenue, then that expenses needs to be linked to in the same period to that revenue generated and recognized. Cost principle, assets are recorded at their original cost. If you buy a plant machinery at, let's say, $100 million at an original cost, and today the value is only $10 million, you need to keep the cost as 100 million, not their current market value. Then there is objectivity principle, in which uh, financial information should be based on objective evidence and verifiable data, not a plain gut feel. Right? Then there is a conservatism required, principally, where when faced with uncertainty, you should, as a accounts person, choose a solution that will least likely to overstate assets income. So err on the negative side, on being on the lower side of revenue, and if required on higher side of the expenses. So these are the major GAAP concepts. What are the benefit of GAAP? We talked about some of them as we were passing by. So one is the financial statement prepared under GAAP can be easily compared across different companies and time periods. So comparability. Second is transparency. GAAP ensures that financial information presented is transparent, enhances trust among the investors, creditors, and the stakeholders. So transparency is another benefit of GAAP. Then GAAP provide consistent accounting standards, making it easier for analysts and investors to understand and interpret the financial data. And lastly, financial statements prepared in accordance with GAAP are viewed as more credible and reliable because there is a transparency. There are certain principles that are publicly known which can build this credibility. So let's look at two more things on GAAP. One is GAAP versus IFRS. IFRS we will cover in the next lecture, but let's touch on it, and then GAAP compliance. So while GAAP is primarily used in United States, many other countries use International Financial Reporting IFRS, which are developed by the International Accounting and Standards Board. Both sets are standard. Both sets of standard aim to provide transparent and comparable financial information, but there are differences in specific accounting treatments and principles. And we will talk about this in the next lecture in a little more detail. This is more like a primer for you. Then for GAAP compliance, organizations in US are required to adhere to GAAP while preparing the financial statements, especially if they are publicly traded or regulated by the Securities and Exchange Commission, SEC. Now, auditors need to ensure compliance with the GAAP during their examination of the financial statements. So that's the compliance requirement for GAAP. So net in summary, GAAP provides a comprehensive framework for financial accounting and reporting, ensuring that the financial statements are consistent, transparent, and comparable. And this enhances the credibility and reliability of the financial information available publicly or privately. So what do we do next? Having looked at the GAAP, we will now look at IFRS in the next lecture. So thank you so much for watching this first lecture on basic accounting concepts. I hope you continue to learn new things, continue to enjoy. And I do look forward to see you again in the next lecture. Please feel free to message me if you have any questions. I'll be happy to answer a question. And do download the PDF file to take a look at anything that is of specific interest to you.